Mainfreight established itself here in 1978 as a domestic transport business, and back in 1978 we never thought for one moment that we would find ourselves in China some 30 years on. But we got ourselves into Australia in '89 and again as a domestic transport operator, but during that time we acquired a business that had a lot of Asian trade, and by buying that business in '97 we found ourselves in the Asian freight trade, principally from Hong Kong, a little bit from Shanghai into Australia. By '98 we had established a joint venture with Hong Kong and our Chinese agent. We took a 40% share of that company, and just following on from what Teo's saying, is the joint venture route was certainly the most sensible for us. We were a bunch of truckers coming from New Zealand having no idea how the Chinese wanted to conduct themselves in terms of business. So it was a logical place for us to be. We started ourselves in Hong Kong. It was easier to set the company up there. Banking rules, etc. Was a lot easier, and we got our Asian beachhead established on the gateway to the Pearl River Delta and from the Guangzhou province, which is where the majority of freight at that time was moving to New Zealand and Australia. By 2000, we had established another joint venture operation in Shanghai, and it was a separate business to what we had in Hong Kong, but with the same shareholders. Between '97 and 2007, growth was very slow and very deliberate for us. The majority of the trade was exports from China into New Zealand and Australia. And the rationale for that is that the customers here in New Zealand and Australia paid the freight. It was an FOB market. We had the ear of those customers. We were able to influence the freight decisions down under, and our Chinese partners really just facilitated the movement of freight southbound. And in fact, the owner of the business that we entered into, his name was Nanbang, which actually meant southbound, and he was only ever focused on southbound freight out of China. Over this time, whilst we were there, we gradually increased our ownership to 52%, and we started to introduce Mainfreight disciplines, Mainfreight culture. We got our financial reporting systems in place, and we introduced the Mainfreight bonus system. And surprise, surprise, thinking that China was a communist country and that we'd all share in the profits equally, once we introduced the bonus system, you could see capitalism rise very, very quickly. Today, we're proud to have those same shareholders in our business still today, and from the funds that they've had from their bonus schemes and of course from the purchase of the business, those two ladies now own property both in Shanghai and in Hong Kong. The slide, have you got the slide thing working? Thanks. From 2007, where we purchased the business 100%, we had done our apprenticeship. So we had learnt the culture, had learnt the structure, the way to do business. We were no longer truckers from New Zealand. We were international freight forwarders, and we started to grow the business under that 100% ownership model. We grew a lot more quickly than what we had in the past, and at the same time, we established ourselves in the USA. And in doing so, we established trade between China and the US. By this stage, Nanbang had moved on and obviously was no longer just focused on southbound trade out of China. But that allowed us to develop these trade lanes. And in fact, China and the US is now our largest freight trade lane. And we were also able to put in our own IT structure and expand the branch network. And as you can see, that branch network followed the coastal cities, the rivers of the Yangtze in the north, and of course of the Pearl River in the south. And now, as we start to develop the business more, we're finding ourselves having to be pushed inland as labour and manufacturing moves west rather than east. Certainly we're into the second and third tier cities of Chengdu and Wuhan. All of those cities provide an air and sea hub, either using the river or using their large airports. Planning a board meeting for Europe and for China next year, we can fly directly from the Netherlands, where our European business is headquartered, directly into Chengdu. So the hubs are there for both freight and for passenger. Are we? Okay, got it. So there's no doubt that by establishing ourselves in China, it got us involved in global freight decision making and got ourselves involved in global freight movements. So today, our Chinese operation is trading with both the US, New Zealand and Australia, Europe and now South America. When establishing the business, we minimised the number of foreigners in our business. So we really only have one foreigner based up there. He's an Australian of Italian descent and seems to have a great relationship with the Chinese. But effectively, the rest of the business are locals. And those locals have given us a strength and improved our knowledge of the Chinese business practices. More importantly, we've established a Mainfreight Asia culture as against a Mainfreight New Zealand culture or a Mainfreight Australian culture. So we've got a far better understanding of doing business in China. And of course, what we've learnt, and I think it's an important lesson, is that business in China is driven very commercially from a local and provincial base, not from a centralised base. So therefore, having locals in each of the areas is extremely important to be successful in that particular area. For us, an all-China solution for logistics will take significant investment. Teo talked about e-commerce, and certainly the rise of e-commerce in terms of freight is developing quickly in China. There's no doubt about that. But the last mile is very difficult. And for us to establish our network to service the last mile will take an awful long time when you talk about cities of 32 million people as against what we have here in Auckland with 1 million. Certainly we view China as a marathon, not as a sprint race. Just to give you an illustration, as we've grown and since we've owned this business since 2007, there is no secret in the fact that because we were in China, that our offshore revenue for the business, we have 1.8 billion in revenue for Mainfreight these days, hopefully a little more in the next 12 months. 75% of that revenue is now driven offshore. And the China business, if we take our FOB sales into account, is at this stage still only 100 million. That's very, very small in comparison to the freight market that's available for us. So we're still a very small player. Convert that to profitability, 60% is now outside of New Zealand. So, we've come from this trucking company established in 1978 here in New Zealand to now being at least a half global freight forwarder, and revenues and EBITDA being earned far more than what we've got here. Our team in China would suggest a couple of things. If you are concentrating on China, a lot of preparation. Don't rely on your export experience to other regions as being the basis for what you might do for China. Your presence there, successful companies are those who have a presence all the time, or at least have sustained visits. Your partners, you need to choose very carefully and maintain good communication. Your product and brand, be very careful. What your brand says here when translated in China is not necessarily exactly what you want it to be saying to your customers. So be careful with your brand, and certainly from our point of view, our brand has been pinched twice in China and once in Southeast Asia, and we are fighting to hold on to our brand and maybe having to trade under other brands whilst we do that. So the detail, understand the regulations and the documentation. There is an awful amount of signing that goes on every time that you open another branch. We would say it takes commitment, courage, and a lot of time, a lot of effort, and a lot of respect. It's not like home. The political, social, law and order, geographical differences are very important, try and learn some of the local language. Organic growth for us versus acquisition growth, it slowed us down, but it gave us a stronger base, and the joint venture that we started with where we did our apprenticeship was certainly far better than thinking that we could go in there and buy a Chinese freight forwarder. Learn, listen, build trust, and then demand trust from those that you have running those operations. What could we have done better? A deliberate choice to grow our China business organically slowed us down. However, we are a stronger business because of it. We didn't grow in-country sales well enough and relied on freight nominations at the outset, and we did not focus on that growing import market that both the Prime Minister and Teo has talked about. What's next for us? We're building our presence in Southeast Asia, and we see a lot of trade from the Southeast Asian countries, intra-Asia into China and from China. We'll expect to expand our range of services into warehousing and customs brokerage, and we're likely to have our China-Asia to Europe business match the same volume that we've got from China to the USA, and we expect that to happen in the next 3 to 5 years. Those trades will far outweigh what we do between China and New Zealand. And we certainly didn't buy the European business because of what we've got in New Zealand and Australia. That was all to do with what we have in China. In summary, being established within the Chinese economy provides many more opportunities than just an export market. And that I think is the difference for us. And I think it's a thing that perhaps the government and Mainfreight don't understand, certainly from a service industry's perspective, is that actually the earnings that we've got on that China to the US trade helps our profitability, which we bring back home in what we view as export earnings. Yet perhaps that's not necessarily understood by the government, but in terms of what we do, that helps us develop our business. It's not all about exports. By being established in those bigger markets, having your own operation there, the opportunity to exploit those bigger economies with other economies of the world is certainly exciting. Thank you very much.